Cisco to acquire Splunk for $28 billion. What a fun name that is, Splunk. This is Cisco's largest acquisition ever. So is this a good deal? Is Splunk going to bring growth to Cisco? Can Cisco really even afford this? We're going to dive into all that very soon. Let's first look at my portfolio performance. This is something I promise to share with every video. I want to be transparent and honest. If you like that type of content, be sure to subscribe. My growth has dwindled in this portfolio. We're seeing a pullback in the market, especially with real estate. So take your eyes over there. You'll see realty income is down 13%. What we're focusing on today is Cisco. Right now, that company is up 25%. It's held up with Microsoft and Amazon, the big tech companies, as far as the profits that I'm making. It is a smaller portion though, at only 2%. So this is the company we'll be talking about as they are planning to acquire Splunk. Now, before I go any further, I just want to thank you guys for subscribing to my channel, watching, commenting, however you support it. It means a lot to me. We're an investing family, and I think we're all together. We're going to become wealthy by sharing our knowledge. And I want to offer another way to help with this channel, and that's monetarily. So I created 3 membership tiers that you could join. The first one is called the Financial Focus tier. It's $2.99. You get loyalty badges that I created, so I do have a creative side. You get to use special emojis and priority replies to your comments. The next tier is the Financial Discipline tier at $6.99. You get everything from the first tier, plus early access to videos, member shoutouts, photos and status updates, exclusive members only videos. I think that's the coolest perk there. And then the last tier is the Financial Freedom tier at $24.99. You get everything from the first and second tier, plus you get to connect with me and other members on Discord, and you get members only live streams where I will share every sell and purchase that I make. So I hope that you consider this. It would mean a lot to me. Of course, you do not have to. Just your support and subscribing and watching is all I ever need. But if you feel like helping someone out more who puts a lot of time and effort into their videos, it would just be much appreciated. There's also a thanks button below this video at the top of the description, and that's where you can just do a one-time donation. Again, I appreciate the consideration. I by no means expect anyone to do this. It's just if you feel like supporting me further. So thank you very much. Now, Cisco. Let's do a quick refresher on what Cisco does. They design, manufacture, and sell IP-based networking and other products related to the communications and information technology industry worldwide. They provide end-to-end security products consisting of network security, cloud security, security endpoints, unified threat management, and zero trust, which is a user verification tool. They do many other things related to cloud and infrastructure, but mainly I wanted to highlight the security side of things since we are discussing their acquisition of Splunk, a company we will dive into here in a minute. Cisco has been focusing more on cybersecurity as their growth has cooled in recent years as IT spending dollars from customers has shifted from on-site premises hardware to more cloud-based services. Something this acquisition will help boost with is the cloud-based service side of things. I do own a small holding of this company in my portfolio, as you saw. I invest in Cisco as it is transitioning to more of that subscription-based model, which I like and see great benefit with. I do love their focus on cyber and network security, which I see as a vital service that will grow in the future. Plus, it offers an attractive dividend of almost 3%, and I feel it hovers often in undervalued territory. So lots of buying opportunities for future growth. So that's Cisco in a nutshell. Let's move to Splunk. Splunk is a market leader in security information and event management, analyzing log files and other data, and using artificial intelligence to help companies minimize the risk of cybersecurity incidents. These are all highly valuable services nowadays. Here's an example of something they offer. It's a unified security and observation platform that companies can utilize to see how resilient they are and maybe protected they are against threats. Pretty cool stuff. Now, there's acceleration in the adoption of generative AI, which means the need for cybersecurity prediction and prevention will grow as threats are growing as well. Hello, MGM and Caesars cyber attacks that just occurred. That was huge, costly, and embarrassing fallout. Damage from cyber attacks will cost about $10.5 trillion annually by 2025, and that's a 4 times increase from 2015 levels. Throw in cloud environments and it's become very complex, and something this acquisition will greatly benefit from as they will offer the expertise and added capacity to deliver to customers more options and protections. So Splunk plus Cisco equals a wider moat, and this will allow increased investments in new solutions and innovations. Cisco says this deal will accelerate their business transition to more recurring revenue, something they have been focusing on for years. They expect to be cash flow positive and gross margin accretive in the first fiscal year post-close and non-GAAP EPS accretive in year 2. Now, let's look at some of their financials. This is my stock facts label, something I created, and you see it looks familiar to an attrition facts label because I think familiarity is where we learn as we can easily relate and read things better that way. On Cisco's end, on the left, they're a $216, almost $17 billion market cap company, where Splunk is $24.5 billion. Now, I'm not going to go over everything here. I want to focus on a few highlights. Let's look at the cash flow growth over the last 5 years. We'll see Cisco is up 3.44%, where Splunk is down 3.95%. Now, it's always important not to just look at one set of financial metrics. You want to look at something from different angles, which we're going to do here in a minute with their cash flows, because the negative 5-year growth doesn't tell the whole story. There's some positives with Splunk. Now, revenue-wise, the growth on Cisco has been very slow. You'll see 6.43% trailing 12 months, 1.44 over the last 5 years. But look at Splunk, 31%, 23.5%. That is amazing. And I can see why Cisco is going after this company. That revenue growth should continue. Also, gross margin and return on equity, they blow Cisco out of the water. You see here they have an 80% and a 44.72%, where Cisco has a 64 and 28. So again, another positive that Cisco is going to be acquiring. Now, debt-wise, Cisco has very low debt. I do a lot of analysis, and this is a company with low debt comparing to others. That's fantastic. That means they have discipline, they have a healthy balance sheet. Now, Splunk, they are a newer company, they're trying to grow, and so they're gonna have some expenses that they need to take care of. So their debt is really high. It's usually above their asset level, and you'll see here throw some of their numbers out of whack. Now, they don't pay a dividend, but Cisco does at about 3% yield. They're at a 56% payout ratio, which is a little high for me, but not bad, and they do have slower growth around the 3% range. Now let's look closer at those cash flows. As promised, this is going to be a different viewpoint and give you a little bit of a different story. So let's look at Cisco first. Let's see how their free cash flows are. The top portion is the year-to-year comparison, and the bottom portion is the quarter-to-quarter comparison. We'll see here, year-to-year, Cisco remains relatively flat. In fact, from 2018 to 2022, they went down slightly. The years in between held in the $14 billion range. So just sturdy cash flows. And quarter looks a little better. It looks like there is some growth here, quarter to quarter. I always like to compare the current quarter to the prior year. So 3Q 2022 was $9 billion, where this third quarter 2023 was $13 billion. So a good increase. So that's a positive sign. Maybe those reoccurring revenues that they're trying to focus on are kicking in and helping this company out. But now if we look at Splunk, let's look at their year-to-year data. We'll see here growing free cash flows. It did dip in the negative in 19 and 20, but now it popped up in 2021 and grew even further in 2022. That's a positive sign. In quarter-to-quarter comparison, it also looks good, as first quarter of 23 versus first quarter of 22, we see a decent increase in their free cash flow, and overall it's on an uptrend. So you have Cisco that has sturdy cash flow, you have Splunk that has growing cash flows, is going towards the positive side of things. So Cisco is getting a company that has strong revenue growth, impressive gross margins and return on equity, and free cash flow that is going in the right direction. So all positive so far in my books. Now let's look at Splunk's net income. So their sales as well. And the sales, when we compare year to year, are going up virtually every year. That is awesome. The net income, though, has been net losses every year, though from 2021 to 2022, that's a pretty big improvement. Now, quarterly wise, I will highlight quarter 1 of 23 versus quarter 1 of 2022. You will see improvement in their sales, and the quarters in between were higher. So overall, I think this is a very positive thing. And the net income, you'll see a pop of an actual income instead of net loss in quarter 4. So that is great. They're moving towards, I feel, an area where they're going to be popping in and out of that net income, but eventually be solid in that net income instead of the loss range. So Cisco, as of third quarter of 2023, held $23.3 billion in cash and short-term investments, and long-term debt was $7.4 billion. Now, I think a more recent number, they're up to about $26 billion in cash and about $8 billion in long-term debt. This is a very healthy cash-debt ratio, as we saw in the stock facts label as well. The deal is for $28 billion. Cisco plans to pay $157 a share in cash, which is nearly a 31% premium to Splunk's current stock price. So they are betting big on this company. They plan on financing this deal through a combination of cash and debt. Cisco should be able to pay the majority in cash due to their current cash balance and take out minimal debt. So yes, it's an expensive deal, but Cisco has shown discipline with their low debt and sturdy cash and free cash flow levels that they can afford this no problem. It's like a consumer with lots of debt buying a new iPhone versus a consumer with very low debt buying a new iPhone. Which person would you rather bet on being able to keep their phone and pay all their bills? Well, Cisco is the one in the good position to pay for an acquisition like this because they have shown good financial discipline, and that allows them to make this move that they see as a needed one and still have plenty of room for unplanned expenses. So let's talk about some risks and benefits. I see two main risks. Fierce competition is the main risk with names like Microsoft, IBM, Palo Alto, CrowdStrike, Zscaler. There's a lot of them out there. Even other big tech companies like Google have aspects of that. But this acquisition will help them better compete because it will grow their moat, aka their competitive advantage. But I think this is their biggest threat, as these companies have, some of them have a lot more cash flow or a lot more of a bigger ecosystem. So Cisco does have to remain relevant, and this is the way they're trying to do that. Now, the other risk is regulatory impact. Now, I think this is a limited risk as there are a large number of competitors, so Cisco won't be seen as a monopoly, and Splunk and Cisco have minimal product overlap, so it's a low risk of the deal being blocked, but it's one that is still there. Now, the benefits, I think, outweigh the risks. The benefits are the increased recurring revenue, which is future dependable cash flows and growth of those cash flows. Also, it will widen their moat and competitive edge, as we stated, and it will help with customer retention by creating an expanded ecosystem. And it will improve margins long term, something that Cisco has struggled with. So there's some really big benefits for Cisco. So for me, Cisco is making a necessary move to show it is serious about growth and expansion as a company. Cisco has kind of been this average tech company, but I believe they are trying their hardest to become a growth story again. They have some work to do to get there, but they are moving in the right direction. This acquisition makes me more bullish on Cisco and has actually changed my mind from just a holding position to now I'm going to add more to my position. Cisco does have fierce competition, but they are a solid company with deep ties with their customers. They have a prime opportunity now to grow their customer base, but more importantly, their revenue and cash flows. This $28 billion hit will affect them short term, but it's a hit they can take, and I think it's a reward well worth it. So Cisco is betting big on security software, and I do think it's one that will pay off due to the expected growth in the need for companies to ramp up protections against cyber threats. So as an investor in Cisco, I think this is a great move and one that will pay off long term. This move only makes me more bullish on this company, and as stated, I will add more to my position. It will still remain a small allocation of my portfolio overall though, as I do think they have a ways to go to prove their move towards recurring revenue is highly successful, and I do think Microsoft and Amazon are my better tech plays. But Cisco offers something different, a chance at a turnaround that may just make it my best performer due to its low valuation and future growth potential. So let me know if you think Cisco acquiring Splunk is a good deal. Let me know if I missed anything that makes this deal even better, or if there's something I missed that would signal some issues. Thank you for tuning in. Have a great day, and see you soon on Mark Arnold's Finance.